You guys came out with a report, I think it was late Feb. With due respect, of course, I mean, how relevant are day-to-day strategies right now? What we knew last week is probably a little bit more different this week. What do you do short-term here?
Yeah, I mean, in short term, you've got to be defensive. I mean, we've been recommending diversification across portfolios, and particularly to have some element of commodities there and more diversified across equities. But clearly, at the moment, equities are under a lot of pressure. But I think there will be some stabilization, and there will be some good opportunities to pick up good investments.
Right, and that recovery in Asian equity markets, I know this is a very fluid concept right now, but in your opinion, when do you think that recovery starts? Is that more now a late Q2 story at best?
Yeah, I mean, I think, a lot depends on what happens with growth in China, and also what happens with, COVID and opening up. I mean, at the end of the day, people are looking at the Chinese equity market and saying, well, why is it not going up? We've got, the possibility of more stimulus from the fiscal side. Definitely China's moved to a sort of growth policy, but the market's not doing well. And I think the consumer's still very weak and people aren't that confident. So we're likely to see, what will change that is when we start to see earnings pick up. And also lockdown. I mean, we're still seeing some pretty weak numbers out of China and the rest of Asia. But when it's risk off, David, everything goes down, particularly the more liquid markets of, in Hong Kong and the H-share, the ADRs in the US. I mean, they go down as well as people start to, take money off the table.
Sean, I got to bring in the Fed. Meetings next week, inflation's coming out later this week. They do have a chance to calm the markets down. What do you think they're going to do, and what do you think they're going to say?
Well, I mean, I think it was pretty clear from Powell's message to Congress the other day that growth in the US is strong, that inflation is picking up, that the labour market is tight, and he's going to start to tighten monetary policy. Now, will he do it as quickly as he was going to do 2-3 weeks ago? I doubt it, but I expect 25 basis points is baked in. The US will not be as affected as Europe. I mean, if you look at we've just changed our inflation forecast after the invasion,
right.
And you're looking at 7 to 8% inflation in places like the UK and Europe. You're not looking at that magnitude in the US. Yes, it does put more pressure on inflation, but not as much as the market might think.
In terms of earnings exposure then, since we're talking about, I guess, market exposure to what's happening over in Russia and obviously the sanctions to Ukraine, how does Asia sort of stand between the US and Russia when it comes to earnings exposure there?
I think Asia's in a pretty good place. I mean, look, there's with some of the commodities that particularly are in Ukraine, we have to be a little bit careful because some of them are part of the supply chain, particularly for semiconductors. And you see talking about nickel earlier on. So there are always the sort of second and third effects. But generally, Asia should be in a better position than Europe because it's coming from a much lower inflationary base, and it's really just going to be this supply inflation that's going to be a problem. And in one way that depends country by country, obviously different, but fiscal side can sort of take some of the sting out of that if they want to. So, in that way, it's not as bad a situation as you've got elsewhere. You've got really broad-based inflation in the US. And then you've got the element that we're actually in a loosening or a flat cycle in China. So monetary policy will be
right.
Either supportive or flat, and you'll get more fiscal policy. So economically, Asia should pick up better. I mean, in one way, if you're really going for more of a bear scenario, people are wondering whether this is really going to bring growth down globally. Is it going to bring a recession? And that's what equities are sort of fluctuating around about now. In Asia, we're not going to have a recession. China, maybe the forecasts of the MPC are too high, but there's still going to be positive growth. And I think that's going to help Asia, but only after the volatilities calm down.
Right. Now, do I look at Asia, Sean, in a different way, I guess? When you look at, for example, the dispersion that's taking place across, the currency markets, and it does seem that the market's drawing a line between who the buyers and sellers are of commodities right now. Is that the way I should be looking at, say, country exposure at this point in time as well?
I think so as well. What's got the marginal change, and it's interesting that countries like Indonesia, which you'd have thought in this sort of year would have really sold off on the currency side, haven't sold off as badly because they've got commodities, they've got more nickel. Australia's holding up better. Japan's one we have to watch because I think Japan on the company side, where we've been quite positive on Japan over the last sort of 6 months. In the last month or so, we've been seeing the oil price making a difference, and certainly on the company side that could increase costs. But otherwise, I think it probably makes the RMB a good anchor, and I think that is quite positive. Currencies you're going to have to watch will be in India. Most of the emerging market and Asian currencies that had problems in the taper tantrum are in a better situation. We've always said that, but India will certainly be hurt by increases in oil price or sustained increase in oil price.